So Wall Street analysts are reducing their Q2 estimates deliveries for Tesla. For example, Canaccord trimmed their Q2 delivery estimates from 461 to 429, even below the FactSet consensus of 445. And to be honest with you guys, this Q2 deliveries is gonna be another miss in my opinion. However, though, the earnings are going to be all right. I think this is the pivotal quarter for Tesla, in my opinion. In fact, I have increased my Q2 delivery estimate from 420,000, 421,000 to what I'm going to show you guys what I think it's going to be. So let's just get down to it. Smash that like button. Hit subscribe if you haven't already. Let's go. Here's my daily production and delivery chart for Q2 on a monthly basis per Gigafactory broken down. And yes, this is also available on Patreon that you guys can check out, card in the corner. For Shanghai in the months of April and May, these are confirmed delivery numbers from Shanghai themselves, Tesla Shanghai themselves. So we can't add that to our production column here because it's already delivered. So we have here just below 135,000 vehicles already delivered. So that helps us a lot. In April production, we got over 60, almost 64,000, but deliveries just over 62,000. So it looks like what Shanghai is doing, and we can probably see this happening with Fremont, Berlin, Texas, is that they're only making as much as they need to sell. They don't want to have too much in inventory because, hey, let's face it, if they have too much in inventory, they have to bring the prices down even more. And I think Tesla is practically pretty much done doing that. So instead of producing a whole bunch of cars that people are not going to buy at the moment, they're going to reduce, well, they've already fired about 10 to 15% of the whole entire Tesla staff. That's definitely going to affect the production rate. And if you guys remember in Q1, deliveries was 386,000, but production was 433,000. So there's a lot, they have a lot of inventory. So they got to clear that out first before making new ones, which makes sense with Shanghai in April. And we don't have May production numbers yet, but I am estimating to be around 75,000. Moving on, in June, I do think they're going to be producing just below 77,000 vehicles. In Fremont, there's about 2 holidays here, one in April and one in June, and I did it about an average of 1,300 vehicles being produced daily because of the Model 3 refresh that's slowly being ramped up. So I think that's being dampened. So because of that, instead of doing the normal 1,700, 1,600, I did a 1,300 here, and we get just below 115,000 vehicles produced in Fremont. In Berlin is a little tricky because they did come out and they said that their capacity now is 6,000 weekly, but we know they're not doing 6,000 weekly. And we do know that in Q1 there was a lot of interruptions, but the Red Sea was one of them, and then there was some erosion thing going on. So there was a lot of interruptions. So I do think they are slowly picking it up a little bit, but not as much as they were before. So instead, I put on an average of 575 vehicles being produced on a daily basis, and Berlin has 3 days holidays in Q2. So doing that, just over 50,000 vehicles being produced. Texas, we do have a little bit more clarity, but not as much. Here's the thing with Fremont, Berlin, and Texas. Shout out to Tesla Shanghai for telling us how many vehicle deliveries and productions are going to be. This way we get an idea what the quarter is going to be. I just wish Fremont, Berlin, Texas could do that. But with Texas, we did get confirmation that every single week, Giga Texas produces 1,400 Cybertrucks weekly, which is 200 daily. So that is crazy. So my formula here, I did add it a little bit, but I still kept it conservative. Nonetheless, we did get about 66,000 vehicles being produced in Texas, including the Cybertruck. So that is a sheesh moment. Total production, excluding April and May of Shanghai, is over or almost 307,000 vehicles. Give that a 95% delivery rate of 291,000 or almost 292,000 total deliveries, including April and May of Shanghai. We get 426,523 vehicle deliveries. Now, the shocking part here is that production is below 450,000. And I'm not too shocked if I see this number, like around the 450s, 455, because again, I think they're producing to order. Now, most of you guys will go like, well, Pejjy, Tesla always produced to order, but I think now they got it even more strictly. They want to make sure that whatever they are producing doesn't stay in inventory for too long, at least for now. The only doubt that I have about this is Giga Texas. I think Giga Texas could be over 70,000. That's why I'm saying around 450, 455. I can see that happening. But I'm just going to go with this. I know I'm a conservative guy, so let's just go with this. 426,523 vehicles being delivered in Q2, which is way below, well, not way below. It's actually almost as close to the Canaccord's analysis or prediction or estimate of 429,000. So that seems to be close. And for all of 2024 so far, Q1 and Q2, if you add them up, it's over 813,000 vehicles delivered. Now this number at this time last year, it's about 50, 60, or I think it was close to 75,000 vehicles less than last year. So yeah, that we got to keep in mind. Let's go see what the estimate's going to be for Q2 of deliveries of 2024 for Tesla, see what the energy will be. And I think I'm so optimistic with energy, guys, and see what the stock price will be and all. So smash that like button. Let's do it. Some important notes that you guys should know in my Q2 chart is that vehicle deliveries, since now we have the benefit of economy of scale here better than Q1, INQ's vehicle gross profits to 16.2%. Total energy revenue of 1.9 billion, up from 1.6 billion. Now this could be higher. That's the crazy thing about energy. It could be higher, but I kept it at like what, a 16% increase since Q1 to 1.9. We have total energy profits of 24%, making it $456 million. Now, operating costs was interesting, guys, because remember, Tesla did lay off 10 to 15% of employees. So when I did the math with an average of 80,000 salary annually for each employee, that came down to $300 million per quarter. So almost $1.2 billion pretty much saved in a year, but we know that Tesla's going to continue hiring as they are right now. So for this specific quarter, I didn't reduce 300 million, but I reduced 150 million right from their operating cost. Maybe Tesla's giving them severance, maybe Tesla's giving them a package when they leave, whatever it may be, I just reduced it to 150. So instead of 2.6 billion, what I originally thought was going to be, it's now 2.45 billion for the operating cost. Taxes 350, other income 350, stock-based compensation of 500 million, and obviously shares outstanding is being diluted as usual. Going to the top here, credits 450 for pretty much all the quarters, and average selling price, I kept it at 43,000 except for Q4. Increased it a little bit because of the Cybertruck going even higher in mass production. And I do expect price increases by then as well. Let's go ahead and add this in. 426,523 vehicle deliveries, and bam, take a look at all that. I love this chart, and yes, this is also available in Patreon as well. So check this out. We get total GAAP gross margin of 17.6%, which is really good. We get the quarter revenue, Q2 revenue total of 23.5 billion. We get operating margin. Now here's the crazy part. We get an operating margin of 7.2%. Would this be the case in Q2? And if we get a nice high operating margin like this, the stock's gonna roar. Because this is a big jump from 5.5 to 7.2. For sure, what this indicates is that Tesla has 100% bottom on their operating margin. So that's a big jump. You're skipping 6% going to 7.2%. So that is a sheesh flipping moment. We get net income GAAP of 1.7 billion and non-GAAP of 2.2 billion. EPS of non-GAAP of 63 cents. I think the street right now is 60 cents if I'm not mistaken. I'm pretty sure if these numbers come out, the actual deliveries numbers that come out, they're going to adjust it to that. So that looks like, unlike in Q1 that I did say is going to be a miss, it looks like this is going to be a beat. Regarding my delivery numbers, I am saying this is my final number, but if something major comes up or changes, I'm definitely going to change that as well. But as of now, looking how the data is, it looks like 426 or 427,000 vehicle deliveries seems to be a realistic number. We'll see if there's any, shocks that comes. We will see then. What's surprising here again is the operating margin of 7.2%. And that is thanks to the operating costs going down because Tesla relieved 10 to 15% of employees. So that helps a lot. If we didn't have that, if we go back to, 2600 or 2650, we would be around 6.4, 6.5, maybe even in the, low 6.2%. That's only if they didn't reduce those employees, right? But if they did, I can definitely see it happening. 7.2%, 7%. Sheesh moment, guys. Sheesh flippin' moment. Now, the stock price. What could the stock price be if this comes up between July 20th and October 20th if this actually happens, because that's when we get the Q2 earnings report, earnings call. So right now the stock right now is in the mid 180s, which is around a 46 PE. To match the same stock price, we need a PE of 52 in Q2, hitting 187. Now why? That's because the fiscal annual EPS is going lower, even though they beat earnings if it's 60 cents, if they need to beat 60 cents, because we got 63 cents here. So why is this? Well, that's because Tesla in Q4 had a one-time tax inheritance, which brought up their whole EPS and net income. Now that's slowly wearing off, right? So that's why it's going down. But the market knows that, hey, that thing was a one-time thing, so they don't even add it anyways to their thing. But we have to add it here because it's metrics. So all these things, we have to add it here. Now, what I do expect to see is that these are great numbers. I mean, look at this. Total GAAP gross margin is going up, so margins are improving. Operating margin is going up, so the business profitability is improving. I can see PE reaching as high as 60. And if there's extreme optimism, I can see this going as high as 65, maybe even as high as 70. But that's being a little overstretched at this time. I don't think that's going to be the case. I think 60 would make sense to 16. Worst case scenario, maybe in the 160s if something goes wrong. But 60, I can see this happening for sure. Moving on to Q3 of 2024, I am expecting a whopping 500,000 vehicles delivered for Tesla in Q3. You guys can call me an optimist, whatever, but I think Q3 should be the good quarter for Tesla. Maybe it can go down to 490. But I'm saying 500,000, and here we get a total GAAP gross margin of 18.1%, which is a sheesh moment. We get a vehicle gross profits here of 16.9%. I put it here purposely because they're benefiting from economy of scale. Energy. This is the big one. Energy, 2.5 billion in revenue and 600 million in profits, which is crazy. Q3 revenue of 27.5 billion. Operating margin of 8.1%, GAAP net income of 2.2 billion, non-GAAP of 2.7 billion. That's an EPS of 77 cents. And again, if I'm Wall Street and all these analysts, I'm looking, oh man, look at this, GAAP gross margin is increasing, operating margin is increasing. We have so many new things coming, like the robotaxi and the affordable new vehicles and so many things going. There's a lot to look forward for this company. So we're going to price that in because we add it to our balance sheet now or spreadsheets now. And I could easily see a 70 PE, which would be a stock price of 258, a market cap of $850 billion. Now that's between October 21st and January 20th of 2025. So, keep that in mind. Moving on to Q4 of 2024. And here's the thing, guys. Q4 doesn't come out until January of 2025. So imagine all the optimism there with Tesla, around the robotaxi, around the affordable vehicles. I think it's going to be a great time for Tesla investors and just for Tesla in early 2025. Now, for Q4, I am saying 550,000 vehicles. Let's go ahead and add this in. If you add these up together, that only comes down to below 1.9 million vehicle deliveries. So I think in a way, I am lowballing this. I think at least we should get close to 2 million or at least 1.9 million vehicle deliveries in this year. But you know me, I'm conservative, so let's go on with what we have. Vehicle gross profits here shot up to 16.5% because again, benefiting from economy of scale. Total GAAP gross margins of 18.5%. Energy 3 billion. Total profits of 720 million. Now I do think this could be a little bit less because of Megapack factory coming online in Shanghai, but we'll cross that bridge when we get there. Operating costs here, I put at 3 billion. Q4 revenue, over $30 billion in revenue. We get net income GAAP of 2.6 billion and non-GAAP of 3.3 billion. Operating margin of 8.7%. That's an EPS and non-GAAP of 93 cents. So at this point, if I'm a Wall Street analyst and I'm seeing for the past 2-3 quarters, oh my God, this company is now growing. Their GAAP gross margins are increasing. Their operating margins are increasing. They are growing. I got to give this company a higher PE. Now, here's the thing. You guys can see the EPS in a fiscal year has gone down to $2.15 from $3.68. So we have to give it a higher PE to match the previous stock prices. For example, in Q3 is $2.58 stock price. In order to match that, we need to give it a whopping 120 PE, which is insane. But you have to take in factor what's going on in Q3, in Q4 of 2024, or at the end of it, or even the beginning of Q1. Because this pretty much comes in the middle or in the beginning of Q1. The earnings comes out in the beginning of Q1 of 2025. So I could see the optimism pretty nicely. I'm pretty sure we'll get some interest rate cuts. I'm pretty sure new vehicles are on the way. Robotaxi has a date, and there's some movement going on there. So I can easily see the PE being around the 120s. But here's the crazy thing, guys. My price target by end of this year, or by end of this fiscal 2024 year for Tesla, is 350. And a 350 stock price needs a PE of 162. Call me crazy. Call me flipping crazy, but I'm not changing my price target, guys. I could see, here's the thing with Tesla. They invest so much in the company. They have so much going on. Full self-driving, robo-taxis, new vehicles coming, and just so many things, energy ramping crazy year over year, quarter over quarter, that I think a lot of these things are going to be priced in 1 to 2 years ahead. And I can see it. I can see this happening. But realistically, guys, I know it may not sound realistically, but I think a PE of 130 or a stock price of 280, just below 1 trillion, makes sense for Tesla by year end. I know, it's crazy, 130 PE, oh my God, Pejjy, you're delusional. No, I think this is justified, because now every single quarter Tesla's growing. We are seeing the growth going up now. And that's what's important, and that's what needs to be priced in. And I think that's what's going to be priced in. But we'll come to Q4 when we are in Q4. Right now in Q2, we have to focus on Q2. My delivery numbers, which are final right now, could change if there's any major thing, but I don't think there's going to be, is 426,523 deliveries. That's it. That's what we got to figure out now. The earnings will come after, but it looks like if they don't change it, if Wall Street doesn't change it, their EPS expectations, it's going to be a beat, but in deliveries, it's going to be a miss, but it's not a bad miss, because I think the earnings are going to come out nicely. Now, if you're a long-term Tesla investor, you don't care about these short-term stuff. I just do it because I'm all in into Tesla stock, and I find things very interesting to track, and just to, it's fun. It's fun seeing what, how many vehicles they're going to deliver and produce in each quarter, earnings, all that kind of stuff. I love it. But we care about the long term, right? 2029, 2028, 2030. Well, ARK Invest came out and they said that the stock price is going to be what, like $2,600 by 2029. I don't know about that, but if they're right with the robotaxi estimate, boy, oh boy, that's going to be a juicy time. I already made a video about it, and I did go live on it. You guys should check it out right here. And I will see you guys in the next video. Make sure you guys subscribe and get your merch in a way of supporting me. See ya.